What is going on, everybody? In this video, we're giving a state of the market in stock picks for August 5th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this phenom market. All right, let's go. So being said, state of the market, what do we got going on? The market is been extremely played an extremely tight range, especially today. It hardly even moved. A lot of this is what I think a lot of people aren't understanding. There is a gap between now and the next Fed meeting, so the market will rally. But you have to understand the Fed is essentially over the past 2 days has been screaming off the rooftops that inflation is going to continue to run and that the Fed is going to continue to push rates. I believe the inflation guess for next week for the core CPI is going to be 8.8, I believe is what they're saying. So it's even up from their initial estimate of what they thought it would be. So now this is the way it works. And 8.8 is no joking matter, right? It's continuing to go up. But this is the way it's going to be. If we hit expectation, the market will be good. The market says, oh, they know what they're doing, so we're going to take it as that. But that being said, if we come in well over 9.1, we're going to be in trouble. That means we're going at 75 or 100 easy on the next go around. But we may even get an emergency rate raise potentially, right? Because there's such a big gap between now and when the next Fed meeting is. Not saying it will happen. It could happen. It's a possibility. All that being said, what we're looking at tomorrow is we are looking at the non-farms tomorrow. That is what matters. We want to see what is going on. And so far, all the job data, right? The market's full of jobs. The thing is a lot of people, the market may be open, but there's no one to interview people. There's nobody. They're looking for very high caliber people. They're very selective, right? They have to be because the budget is very tight. So these jobs are left open. You are also just coming off a bunch of people getting paychecks freely every month and spending, and then going to the essentially we had the great resignation, right? And so you have a lot of people that are out looking for work and trying to come back to a field that potentially they've been out for a while, right? People want the consistency. They don't like to see the gaps in employment. And so all that being said, right, these people aren't hiring. And you're seeing that unemployment. You're seeing all the numbers when it comes to unemployment. The Fed is screaming. These great companies are showing major cracks in infrastructure. You're seeing all these things. And again, you still got 2 months out. Now, if we came in with an emergency rate raise, that would panic the market that, hey, we aren't. This is what kills me is the Fed tries to come and say, no, everything is fine. We're fine. We got inflation under control 1 week. And then 2 weeks after the fact, they're like, no, it's out of control. We can't control it. It's running away. And they're saying this while the market's running up. And the market's continuing to run, except for today. It's actually kind of held, as you can see here on the chart. It's essentially kind of held this 4162. My thing is I think the market could potentially. I think the market's going to do one last little pump up to this 4190, and then I think this thing is going to implode back down. Depending on non-farms, I think it could accelerate pretty quick, at least down to the 4080 mark here. If it breaks through that, we'll really have to see. I don't think it could flush straight through this. Obviously, it's a really strong support. Pretty much buttered it on the way through. Normally, again, on any kind of support that has never been retested, it normally just doesn't blow straight through. So you can tell that the market is trying to get some sort of rally before any Fed meeting and gain whatever margin it can get before some more bad news comes out. Again, the market, I think, is expecting us to miss some sort of estimate here soon. Although we have these gaps in reports and data that matter. I mean, there's tons of reports and data that come out all the time, but the ones that really truly have weight. And so the market really, yes, the market can be swayed with data tomorrow, but really, I don't think it's going to be that much unless it's like really bad. But I think we're more so waiting on next week on that core. And that's what's going to matter. That's what's really going to shift this market into a specific direction. And so with that being said, I think again we're going to try to push to here at least tomorrow. If we do fail here, again, I think we could sell off pretty heavy. You have to also remember next. We got about 2 more weeks. I was talking about the end of the cycle. Again, these red lines here, that's what they are for, is the end of the cycle, essentially for options, which is normally around the middle of the month. We still got about 2 more weeks, so I'm not really looking at that yet, but that's what I was just thinking about. But we still got a ways out for that. So I think the market's really setting up for the core at this current point. So we could continue to chop. That report tomorrow may push us up to here and tag here, and then we just sell off going into Monday, and then maybe we just chop around this area until we get the report, and then maybe that report breaks us back down through here. Is kind of what I'm thinking, or could potentially push us back up. So I think we're going to play this range essentially of 40.79 to 41, essentially 41.70. If it tags up here, 41.84. So I think we're going to potentially hit that and then come back down a little bit, depending how bad or how good the payroll is, and then kind of just float in this area until we get the actual core, and then make a move from there. But if for some reason we do break up here, just because maybe numbers are really good, and then we break up here, if we can get a clean break on this, again, I don't expect it tomorrow. This thing would really have to gap up or have some really amazing news for this to gap up over this tonight, which I don't believe it's going to happen. So I think we're going to get one little pump in the morning and then kind of fade off towards the end of the day. So that's what I'm assuming tomorrow. Again, it's just my thesis, and you should have your own thesis each and every day. Dollar still sitting high at 105. Bitcoin still sitting at 22K. I don't really want to go over those. Oil is actually coming below 90, which is good. And another thing is to be watching. I don't really talk about the bonds a lot. The bonds do matter a lot as well. Now, a lot of people have a different thesis on how the bonds work. Nobody knows exactly how bonds work. They can say they do, right? Like if the market goes up, the bonds typically go down, or if the bonds go down, the market goes up. It really doesn't matter. The only influence the bonds have is the volatility. The best example I've been given is when bonds have a lot of volatility, that will shift the market. Depending on the sentiment of the market. It's not always, they don't always run opposite of each other. Sometimes they run together in parallel, sometimes they don't. It's a very weird cycle, and that's why it's hard to explain bonds. So bonds are more gauged off of sentiment of the market and volatility. If the market is ripping high off of some news, that could potentially cause bonds to rip low fast. Right, but it's not really the best of gauge. But when you see volatility a lot in the bonds, you get massive sell-offs in the bonds or massive rips in the bonds, you're going to have a massive move in the market. Whether that's up or down, you're not going to know whether it's up or down. You should know what the general market sentiment is during that time. So that's why I talk about the market sentiment. If it's good or bad, and then the volatility, it doesn't matter if it's up or down in the bonds. That will kind of give you a gauge on how quick the market will move based off the volatility and whatever direction the market sentiment is in. And so again, no clear understanding of the bonds, but you have to understand that a lot of stuff in the market is very vague when it comes to this stuff, and it's to try to define it is very extremely hard. And this is why trading or investing in all these things, this is why it makes it hard, because if it was easy, people would be making too much money. Institutions would be losing money. So they can't make it precise, right? You just have to understand what is the general sentiment of the market just in general, and then kind of see where the bonds are, and then watch the volatility on the bonds. The bonds go crazy and start selling real fast or pushing real fast, that just means that you're going to get a lot of volatility in the general market sentiment. So just be mindful of that. again, that's really all it does is it monitors the volatility in the market. So again, if they start selling quickly, again, because it shouldn't be moving fast, right? The bonds should not be moving all crazy and haywire. They should be pretty solid and stable. And so when they're starting to get a lot of volatility, that just means you're going to introduce more volatility into the market. So that being said, let's go to Tesla. Tesla is really peaking out here and stalling really hard here, essentially at the 930. Thought today could potentially be a break, but it did not. Again, really watching this 907 mark. If we break down below this tomorrow, again, I think we can fall straight all the way down to 819. I'm not saying it's going to happen in a day. Obviously, you have some support here at 883. But again, you could get a bounce. Well, what I'm thinking is you could get if we do drop, you could get a nice bounce here, back up, at least back up to the 911 before you tank back down here, right? When I talk about these levels here, it's not a straight sell-off, right? Unless the market is really bad, this thing isn't going to sell straight down to there. Eventually, it's going to get back down to here. It's just the way the market works, right? It bounces off these supports, so it hits support and it flutters, whatever the case is. It'll bounce off of these other speed bump supports, essentially what we kind of call them. And then you'll eventually make it down here. And then from that point, you get a nice bounce out of here and then hopefully continue up. Or if the market sentiment changes, you'll get some sort of bounce and then you'll get a break down and you'll start chopping and then break down. So that's essentially how it works. So that's Tesla. Amazon. See, a lot of these are just there's a lot of breaks like this that I'm seeing, and that are break over the 200 daily, which is very good because we had the retest essentially this morning. Now we're popping. We just want this to hold. It needs to hold the 139 mark. If this breaks back below this, you're going to have this. You have this huge gap, especially on like Amazon. And so if we get a really bad report next week, this is what I'm going to be watching for towards the short side, because you got a massive gap here going into next week if we do start selling off. So this is why I like to set alerts, because if we do start breaking, you look for the break and the retest. So you look for this to gap down. Potentially, you're going to retest some sort of level here around the 130, 133 mark. You get a retest back potentially up to the 137, and then that's when it's going to attempt to try to fill the gap. And it's not going to be a straight gap. Obviously, you have support here, but it'll eventually get back down at 122. So it's a way to kind of look at those and realize, again, it's not a clean shot. It's going to, there's other speed bumps in between, but the institutions are waiting more around these bigger supports, right? Because this is where all the liquidity is around these major supports. And this is why I like supply and demand, because institutions look for these and then they wait. And then that's where you get to stop, hunt, you get to break, you tag everybody out, get the liquidity, and then you take off from that point. So that is essentially what you're looking for there on Amazon. I think for tomorrow, another good one too, I know AbbVie didn't do so hot today. That was one I called out yesterday. I didn't take that one today. I actually took, what did I take today? I did take, there was some negative news. One of the Fed members was talking today, and I did take cloud. What one did I take? I took a cloud one today. I'm trying to think here. I did initially look at MR. Myrna did look really good. I took Snow today, Cloud Space this morning. It's a negative news about the cloud is going to really be hurt in a recession. And so that news kind of really sold off a lot of the cloud service industries pretty heavy this morning, but they bounced right back to the current level. Moderna did very well today. It had the continuation play. I'm trying to look for here. Moderna did very well today. I had that second leg up. Now, at this point, you're kind of really flirting with FOMO. These are the ones I'm good for a second day, potentially a third, anything after a third. Sometimes you get 4 or 5 days, but with the general market sentiment, I wouldn't continue to push this. Now, this could run really strong to another day up to the 208. But you have to understand too that if that report is bad and the market will just start selling, you might get an influx of money because people pull money out of tech or value or banks, and this might push up. So you could potentially get on a 3-day. I think third days you're kind of really flirting with it. As you can see, the second day normally is the strongest day, but we had a little bit of a pump. I think we can get one more strong push here. But we'll have to see in the morning. So I think Moderna is still a good one to keep on watch. Coin had a big partnership with BlackRock today after BlackRock called them out for being not scandal. I can't even think of the word right now, but BlackRock essentially talking about how Bitcoin was junk, and now they're buying Coinbase to reduce fees and so they can accumulate as much crypto as they can. That's just my opinion, but you want to deter people from the things that you want so that you can gather more for yourself and then say it's the greatest thing in the world. So with that all being said, coin would be interesting. I don't think it's could hold. What's interesting to me is that Bitcoin, the ratio of Bitcoin and coin isn't really like too correlated. Coin and MicroStrategies have really been running just because Bitcoin is holding that essentially around the 22 mark, which is good. But I think it's just retesting. I think Bitcoin again can run up to like 26, 27, and then it's gonna be your retest before the next drop. Because I think we're going to introduce the whole, yes, we are in a recession kind of thing, and then it's going to panic the market. And then wherever we land at that point, I think it's going to be, could be considered the bottom at that point. It's always 50-50. You never know, but that's what I'm thinking. Banks starting to show weakness again. If JPM breaks this essentially 111 mark, if it opens below that, going to be in some trouble. GS has really been flowing to the same thing. Again, if you're watching this tomorrow and this thing starts selling off, you want to watch the banks. If you open any charts first thing in the morning, should always be your banks and see where they're sitting. If they're sitting flat, that can feed positively to the upside. If they start pushing, know that the banks, everything else kind of just dies off as the banks push, and the banks will stall like this so everything else can push. But if it starts selling off, that means everything's going to follow very close behind. I'll start pulling down the index. Then everything else really doesn't have a chance after that point. So we'll see what happens here. But very interesting setup on everything. Walmart also announced they're doing a lot of cutbacks as well. So there's a lot going on. And to think that I'm just not over here blowing smoke up your backside and thinking that I'm just being a big bear when in fact I'm a perma bull. And right now things just are not looking good. So that's where we go from there. But if you've made it this far, I appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.